Thanks for joining us here on the Market Day Report. I'm Marlon Bowling with you, and it is a Tuesday, and we are going to be talking about your ag commodity trade. We'll focus, first of all, on the grain segment here on this particular part of the program. And in case you missed it earlier, I wanted to walk through some of these planting progress numbers that we had from USDA yesterday. Really caught the market's attention here this morning. We'll kind of walk through the corn and soybean and cotton planting progress numbers. Corn came in with a relatively surprisingly high 71% complete on their planting versus a 5-year average pace of 70%. They made amazing progress, well over 40% progress just in 1 week's time in, states like Iowa and Minnesota. So tremendous progress. Anywhere from 30 to 49% completion rate just in the last week for states of Nebraska, South Dakota, Iowa, and also in Minnesota. So tremendous there. Soybeans also have caught up to their average pace, 32% complete now. Cotton is lagging a little bit at 33% done. And we have the rice actually ahead of schedule a little bit, about 2 points ahead of schedule. Grain sorghum, 3 points behind the average pace right now. Well, I want to visit with Brian Hoops. He's the president of Midwest Market Solutions. He is located in Springfield, Missouri, and get his thoughts on what's been taking place here on the trading floor here so far today. So, Brian, thanks for joining us here. Appreciate that very much. Your thoughts on initial market reactions after all those numbers came out?
Yeah, good to talk with you. Pretty muted reaction. Not a real surprise to the trade with a very fast planting pace. We have seen a lot of our producers and clients make some real fast progress here over the last 7 to 10 days. The states that are lagging are a little bit further out east, Ohio, Indiana, parts of Illinois, where they've had a lot of rain that has really slowed things down. But Western Corn Belt's made some big strides. A lot of producers telling us they can now row their corn. It's emerged and it looks pretty good. So we're off to a good start in the western part of the Corn Belt. The eastern part's a little bit lagging, but this corn market just cannot catch any type of a move here. And it's going to take more than that to push this market higher. I think right now, this is the best thing for us is we get the crop in the ground, and that's when prices are vulnerable to up moves, when you got the seed in the ground and you can actually hurt it rather than being in the bag.
All right. Now, I do want to bring up a point, too, that we had some overnight export sales activity. And that's kind of rare these days. I haven't seen much of that this year for the last month or two. But we did have 132,000 tons of U.S. soybeans sold to unknown destinations. So that caught the market's attention here this morning as well. It was for the current marketing year. Let's take a look at our prices here, Brian, and we'll go first to visit the corn board. In the corn market in Chicago right now, we're down a penny. In July, we're at 366 3/4. Fairly narrow trading range today of only 3 cents wide. We have December down 3/4 at 384 1/2. And if we move on to the soybean trade, right now you have your July now 4 1/4 higher at 969 1/2. So they're starting to get some traction now in the soybeans. November new crop now trading a penny and 3/4 higher at 962 1/2. That is now 4 cents off of its earlier low of the day, getting within a couple of pennies of our high. What about the wheat trade today? Wheat market has really been struggling here lately. We have July Chicago wheat now down a penny at 422 1/4. Kansas City, we have July now trading at 424 1/4. That would be down 4 1/4 cents once again here, just one tick from its low of the day. And now if you look at the Minneapolis spring wheat trade today, we have July down a penny and 1/4 at 538 3/4. That's within a penny and 1/4 of its low of the session. We're off our high by about a nickel. And looking at the cotton market right now, you have your July down 234 points at 82.98 as that squeeze apparently has run its course against the millers. We have the December contract down 17 points now at 74.89. So we'll pause for a break, and we'll be back talking with Brian Hoops, this time about our livestock trade. Lots going on there, too. We'll have it when we come back. Well, it's my pleasure to bring back Brian Hoops of Midwest Market Solutions. He hails from Springfield, Missouri, and he joins us right now via Skype. And Brian, thanks for filling us in on what's driving the grain trade here. I want to talk with you about our livestock market. The cattle market seems to have maybe flamed out temporarily here in the last couple of days. Let's take a look at our current prices and see what's going on the board. Let's go to live cattle trade here so far this morning. And we definitely have a weaker tone here with now triple-digit losses across the board. We have June live cattle at 121.10. We're down $1.35 on the day. We're about 50 cents off of our earlier low of the day, so it's bounced back a little, but we're almost $1.80 now from our high of the day. We have the August down $1.45, October down 123 at 114.42. Now, if you look at the feeder cattle trade, the losses or gains always seem to be exaggerated in the feeders, and that's the case again today. We have August down 246 at 146.82, and now you have your September feeders down 218 at 146.97. So, Brian, we have no cash cattle trade to really speak of yet. It seems like the wholesale beef trade seems to be hanging right in there. I know yesterday afternoon it was firmer once again, but what's going on with this cattle market? Is this all technical selling now, or what happened here?
I think right now that's exactly what we're seeing is a lot of technical selling in this market. You know, we've come off of our highs by a great deal. That was, I thought, was the start of the Goldman roll where traders were selling out of the June contract, but now we've taken out last week's lows. That's uncovered a little bit more technical related selling. So even the higher cutouts that we've seen have not propped up this market. The packers have a tremendous amount of margins once again after higher week of box beef last week and lower cash trade. So they went from a negative margin of about $5 or $6 to about $85 positive. That should support our cash markets this week. We've heard some bids at 128. We don't expect we'll see any cash trade until later in the week. Fed online auction, of course, is tomorrow. That'll give us a little bit of direction as far as how much packer demand is out there, but we don't think we're going to see much in the way of bids or asking prices until we get into tomorrow's trade.
All right, I want to take a look here also at this lean hog trade and see how the futures are doing. They seem to be able to separate themselves a little bit here from the cattle market here the last couple of days, and technically speaking, they actually look to be on fairly firm footing now on the chart. June lean hogs up $1.47 now at 78.72. That's only 20 cents from the high of the day. We're $1.30 now off our earlier low. And July lean hogs now over $1 higher. We're at 79.40 on the day. That's up $1 and a nickel. So all the nearby contracts on the lean hogs are kind of stacking up, leading the charge higher here. And market bulls seem to favor that type of pattern to support their cause.
The cash market's been very strong for this hog trade, and that's really caught a bit under these futures and rallied. Now, we want to point out that seasonals do peak out about the 15th, 16th of the month and start to turn lower in this hog market. So if you're a producer, you can look at $80 in some of those contracts. That may be a great place to start buying some puts and laying off some of the risk after a big rally in the hog market.
All right. Well, thanks for explaining that. I appreciate that very much. And good to visit with you again, Brian. Brian Hoops. He's the president of Midwest Market Solutions. He's located in Springfield, Missouri. And always good to visit with Brian and get his insight into the markets. A lot going on. Very active livestock trade again.
Yeah.
Higher and lower.
Watching those hogs closely for today.
Yep.
Along with every day. Thank you, Markets Editor Marlon Bowling.